With low growth, basically no inflation and overall weak economic activity, experts believe that the European Central Bank will have to do more to stimulate the European economy. And do more means start buying government bonds. The European economy is still struggling to recover from the economic crisis. Unemployment is high and growth figures are low. And things don't seem to be improving much neither. Inflation is decreasing, which is a sign of weak economic activity. In fact, the latest figures showed negative inflation of minus 0.2% in the Eurozone in December. This is worrying, and it puts pressure on the ECB to stimulate the European economy. Philippe Gijsels at BNP Paribas Fortis expects the bank to announce buying bonds for around 500 billion euros in a meeting next week on the 22nd of January.
Well, I think there is a lot of pressure. First of all, they've promised a lot, and secondly, if you look at inflation data, they're not within their mandate of price stability, so in a way they have to do something. So that leaves them with sovereign bonds, and that's probably what's going to be announced the 22nd.
Cinzia Alcidi at the Center for European Policy Studies agrees. She says that the ECB has to act in order to be credible.
Because they're affecting market expectations, and these expectations will need to be confirmed. Otherwise, what is at risk is really the credibility of the ECB.
So far, the ECB has been reluctant to buy government bonds. Germany has been against it, and German politicians have even challenged a European bond buying scheme in the European Court of Justice, arguing it goes beyond the ECB mandate. But earlier this week, the Court of Justice announced in an opinion that buying bonds would be in line with EU regulation, thus paving a legal freeway for the ECB to act. So the experts say that it's only a matter of time before the ECB starts buying government bonds. But then the question is, how much of a boost will it actually give to the real economy?
That sort of very large effect and a sort of silver bullet for the economy will not happen. So monetary policy alone will not make the miracle.
Philippe Gijsels doesn't believe in any major impact on the real economy neither. ECB buying bonds will inject cash into the economy, but there isn't really any shortage of cheap money on the market, as interest rates are low.
One can argue that the effect on the real economy will not be as large at the moment because interest rates are already very low.
Buying government bonds also comes with a risk. It's been described as a measure of last resort, and that means that if the ECB starts buying government bonds and it doesn't work, it will be less tools left in the ECB toolbox to stimulate the European economy in the future.